Are we live? Isaac,
We
you on
are
mute?
live and we're waiting on folks to jump on in right now. So giving it a few moments. Sometimes it takes a little while to get there. All right, we are live. Just now hit. So we're right there. So that's good. That's good. All right, all right. How you doing, Eric?
Good, sir. Like everybody,
Good.
good. Like everybody else, just wrapping up the end of the year, the holidays, wrapping up business and things like that. Trying to push through these last couple of weeks, then start all over again, right?
Start all over again. You excited about this 2026 tax season?
Very excited. Very excited. It's a very, very busy time, but I'm very, very excited.
Yeah, that's exciting stuff. That's exciting stuff. So we can go ahead and get started here. So what's on the topic on Master Your Money with Eric Anderson?
So today, this week, as well as pretty much these last couple of months, we've talked a lot. I've talked a lot with clients about small business tax deductions. I believe that's what we're talking about today, different type of tax deductions that you could be looking out for, that you should be thinking about here as you get ready to meet with your tax preparer to do your taxes, your 2025 returns. I've had a lot of questions, especially with the new bill coming out, about the different types of things that you can write off, be it your vehicle. There's things about buying real estate, all types of different things that are changes because of the big bill that a lot of people are, we'll say, excited about being able to write off to bring their taxes down. So I get a lot of questions about that here recently. Meeting with a lot of clients to do consultations here in the last couple of weeks before I go on vacation to kind of get us prepared for when it comes time to come do your taxes, be it you being a partnership S corp, where you're having to meet in March, or if you're a Schedule C or just a regular W-2, where we're doing your 1040 in April. So we're just meeting with clients right now to try to get you in the mindset of the things that you need to be bringing to prepare yourself for your return. Um, usually, this is not. Usually, you would hope to do these things earlier in the year. It's a lot harder to try to figure out the things that you could be doing to not just save yourself taxes. I hate to just say that because people are so ingrained in thinking about how do I save taxes? How do I save taxes? But a lot of it is more of the financial planning that you could be doing, like retirement, wealth building, things like that. Those are the things you should really be thinking about throughout the year, as opposed to just at the end of the year to try to save money on your taxes. So,
I'll always think about when we talk about business that most people just want to really know like what are the most common type of write-offs that they can write off that I guess that most business owners kind of get wrong or they miss. Is there anything that when you think about it that they miss or they overlook? I don't know if it's mileage, you know, gas, you know, or anything of that nature. I know I probably don't do that because I don't pay
mhm.
attention to like how much it takes to do that. But I don't know if that even really matters if or not. I guess it depending on how much in revenue that you're doing, right?
So just thinking in my mind, probably some of the biggest things that people miss are, business use of your home. A lot of people, I hate to say continuing education because people look at that as like these courses that they're taking. But at the same time, that is a big deal that people can uh, write off. If you're having to take certain type of, like, how I have to take CPE classes and different types of things, stuff for my CFP and all kinds of things like that, I'm able to write those kinds of things off because that's continuing education, right? For what I do for my business. A lot of people don't know that. There's books that I have to buy. There's all kinds of things that I'm doing to grow my education in my personal business that I'm able to write off when I do my taxes. Another big thing businesses don't really think about is if you are making contributions through your business. So we donate to the church personally, but then we also donate. My business actually does donations to my church as well. There's other types of things that I donate to, that I sponsor and things like that. Those are things that I can actually write off on my business as well. And then, of course, things like your vehicle, um, mileage, be it if you're depreciating it out or if you're doing mileage, certain type of business insurances you can write off. Uh, a big thing that a lot of people do not come in and bring to me is business interest. So if I have a business credit card or if I have a business loan and things like that, you can't usually write off the actual business loan, but you can write off the all the interest that you're paying on that credit card or something that you were doing through your business. Obviously, if I'm leasing a car or something like that, I can write that like lease off. But a lot of people do not know that you can write off the interest in your business. If I have business credit cards or business loan or things like that, you can actually write off the interest on those as well.
I know the other folks will be tuning in and be like, so I can get business credit and then I can just write off the the
That's
interest.
what I said. I
I'm
said
just saying, but that's really what it is. Like if I'm getting $100,000 in business credit on my card, I can go use it for whatever, and I'm using it to grow the business.
correct.
However,
And
um,
in some cases, let's be
uh-huh,
clear on that. We're gonna talk about that in a second too. But yeah,
okay,
let's be clear on that. Um, if you are actually doing things for your business, meaning you're having to buy inventory, you're having to again buy advertising, things like that. Those are the type of things, obviously, that I write off. I don't have a whole lot of overhead. So things like advertising, marketing, fees, things like that, those are the things that I actually write off from my business. But if somebody has a bunch of cost of goods sold, they have contract labor, they have to do a lot of traveling. I know that's a big deal for people is travel, and we're going to get into that obviously. But that is a see somebody who didn't know that. But that is something that a lot of people, especially getting towards the holiday season and stuff like that, a lot of people call in and they say, if I go do this or I go do that, um, can I write that off as travel, as a business expense for my business? Because they watch all these videos of all these other people telling you, again, not to say it in a joking manner, but yeah, I'm taking my kids to Disney World and we're sitting around talking about business for 15 minutes and these kids are somehow on my board. And so now I can write off the whole Disneyland trip. Or like if I go on a cruise and I sit around and I make a couple of videos and stuff like that, I should be able to write off my cruise, correct? Because I'm actually doing business on my cruise, right? Those are the type of questions and things that I get all the time when somebody says, "Hey, I'm going to go visit family here, and while I'm there, I'm going to talk business to my friends and my family. If I go, say, to North Carolina or New York or something like that, can I write that kind of stuff off?" And again, you see these influencers and stuff like that. They tell you that you can write this kind of stuff off. And I always tell people, you're correct in theory. These are things that you can write off, but you definitely need to have the backup and everything to prove that you're actually doing these type of things to be able to prove it in case you get audited. But again, you know me. My problem more than anything else is this something you were going to do or is this something you're planning to do in the first place and it's really a business write-off, or is this something that you're just doing this to try to make up a bunch of expenses for your quote unquote business in order to bring your taxes down, but then you're not doing the other things to help you actually grow your business. You understand what I mean when I say that, right?
Yeah.
So if I don't have any reserves, if I don't have an emergency fund for my business, if I don't have a savings account for my business, um, if I'm not doing any type of retirement, if I'm not doing any of these type of things, I'm so fixated again on not paying taxes at the end of the year, but my business isn't growing. That's kind of again hustling backwards, so to speak. But again, when you see all of these videos and everything, that is the main thing that people always come and talk to me. It is very rare that someone comes in and says, "Hey, someone told me that if I make such and such amount of money, I should turn my business into an S corp and then get myself a solo 401k." Or it's very rare that I hear people say, "Eric, hey, I've heard about SEP IRAs. What's a SEP IRA? How does that help me save taxes?" It's always, "Does this car have to be 6,000 pounds for me to be able to write it off?" It's always, "If I go on this vacation, can I write this off?" We don't think about the other side of the other type of tax deductions that you could be doing, that it's not just saving you taxes, it's also building you wealth, correct? It's the same mindset as somebody having a 401k or someone having a traditional IRA, right? You do those things not just for the tax savings, right? You're doing it because you're trying to build wealth, you're trying to retire. So why wouldn't you have that same mindset? You should definitely have that mindset if you are self-employed, and because this is your business, you're responsible to build your retirement, to do those type of things. If I go somewhere and if I work at a job and I just go to HR, not only to open up a 401k, that company actually, depending on that company, they actually give me free money to put into my retirement, correct? How do I retire if I have a business and I'm not thinking about the future and the retirement of my business? Everybody does not have a business that you're going to be able to sell when you get to a certain age and walk away from that business, correct? You need to
Correct.
be in the mindset of, like myself, if I'm an S corp, I'm basically an employee of my business, right?
Mhm.
So my business is able to put money into my solo 401k. Um, it's a tax write off from my business, and the money's growing in there just like if I worked for an employer who was giving me money, right? Who was putting money into my 401k. And me putting money into my solo 401k is tax deferred just like if I worked at a regular job. If I was just a Schedule C and I was doing a SEP IRA, the same exact thing, right? I can write that off and that money's tax deferred just like if it was a regular traditional IRA. But again, when you watch these videos and you watch people talk about the different types of things that your business can write off, those are not the conversations that we have. We have the conversation of, yeah, go buy this G Wagon, go buy this or that, go on all these vacations, go do all these things. And I always say, just like anybody else, just like a regular person who does a W-2 or anything like that, if if you are doing the things, your goals and whatnot, to do the retirement, to do the emergency fund and the savings account, and you want to do all that extra stuff, that's great. That's absolutely fine because as long as you're hitting your goals, right? As a business owner, you should have those same type of goals. It might be a little harder because you don't precisely know how much money you're going to make every month, just like if I was going to a job. But you should still be doing profit first accounting, something like that, where you are basically putting money into retirement accounts, savings accounts, investment accounts whenever you get money, to be able to build that stuff up instead of basically living like you're check to check, except you really don't even know how much money you're going to get every month because, again, you're self employed. But you're spending every dime you get with the mindset of, if I write all this stuff off, I don't have to pay any taxes. And sadly, those are the conversations we have with not all clients. I'm not going to try to say all clients think like that, but there are many clients who come in here and say, "Hey, you know what? Can I go buy this car? Can I go do this?" And I'm like, "We were just talking about how you were struggling to pay your rent for your business, right? So why would I create another expense just because I can save money on taxes?" If I'm and the funny part, no offense, if I'm struggling to pay my bills and stuff, unless I'm blowing that money, I'm probably not going to be profitable anyway, right? So you don't pay taxes if you're not profitable, correct?
Mm. Oh, that hurt. Dang, that hurt.
But again, like I said,
Profitable, not how much you had in revenue. Let's make
correct,
sure that's clear, right?
profitable,
Because we can say, oh, I made this much in revenue, but then this
correct,
is how much my expenses are, and then this is how much profit I actually have, which I could have been negative, right?
correct.
So
Which again is a whole nother conversation because again, so many people don't even realize that if you're not doing your bookkeeping and keeping up on your numbers, because a lot of people go out and get these loans or get these credit cards and things like that for their business. So you're living off credit cards, you're living off of the loan. So you're paying your bills and all this and whatnot. And you're able to pay your rent, pay for your lifestyle, whatever, but your business really isn't profitable. Because again, you're just burning through that loan.
yeah,
You're burning through those credit cards.
had a quick question over there
I got
that
it. What if I
relates to
work half days or do some bill balls for 5 days? Yes, and things like that. That's what we're talking about. So you definitely need to make sure that you have all of that. What's the word I'm looking for? If you have all that notated, so
that.
you
Okay.
can prove that this is actually business, that it was actually a business trip and not just a vacation. Again, I've had clients who've been audited before. They went on cruises and stuff like that, and they just needed to prove that they were actually legitimately doing business while they were on vacation, on a business trip.
What if I know I'm gonna throw this in there since we're on cruises and stuff like that? What if you take your team? Because I know folks that said, hey, they took them all to to the lake, or they did something,
Yeah.
rented out the lake or whatever. But like for instance, kind of putting that into like, hey, what if you took your team to on a cruise as a gift, or in that sense? I don't know if you can write off as a gift or is it a write off, but like you took your team on a cruise, but like that was the business, but it was for that purpose. Well,
So again, if you are doing business while you were on those things, again, like I said, we have these conversations
okay.
all the time at the end of the year. I have plenty of clients who, at the end of the year, they have a certain amount of money, and so in able to write that off, they'll like throw like a Christmas party for the company and stuff like that, and so they write those type of things off. Because again, it's a business expense because again, this is a business meeting, this is a business party and things like that.
Team building, right?
Team building, so to speak.
He said team building, so to speak.
Yeah, basically. Yeah. I mean, no, it's just
No, he
you're
said
trying to
like
do it, dude.
yeah, team
No,
building.
again,
Ah,
and so a lot of times, again, I'm not trying to be funny. I'm really not trying to be offensive. It's it's kind of frustrating to me when people send me videos and it'll be stuff like that.
mhm.
And they'll be like, "Can I write this off? Can I write this off?" And you're kind of sitting back and you're like, "We were just having a meeting like a couple of weeks ago about us trying to get you on a budget and how you're struggling and things like this." And again, I'm not telling anybody not to go on vacation. I'm not telling anybody not to do these things, but you have to think when you see these videos and things like that, you have to ask yourself, does that really help me in my business? Does it make sense for me to go buy that car just because you're telling me I can get the 100%, that I can get 100%? So think about that, Isaac. So I go buy this car and I get 100% depreciation on it this year. But what happens all the rest of the years when you're still making the car payment? I've already depreciated it out.
Yeah.
I've already depreciated it out. So what happens all the other years? So that's an expense that's hurting me from growing, right?
Yeah.
But just because I took this big hit this one year and I got this tax return or whatever, and worse, don't even do anything with that tax return, sadly. But then, you think that you're getting over it. It's the same thing. It makes no sense to go do this huge vacation or whatever and come back and can't make payroll.
Mm.
How does that make sense? But sadly, that's our thought process. If you're doing your profit and loss statements, you're doing your cash flow, and you're thinking about, is my business really profitable? That's like somebody who, again, I'll use the example of somebody who goes to a regular job. If I go to a regular job and I'm struggling living paycheck to paycheck, does that make sense to for me to put going on vacations and stuff on a bunch of credit cards? Does it?
I'm about to do that, Eric. I'm about to swipe this card, Eric. I'm about to swipe this card. I'm about
So
to.
so
I,
again, but that's an
I
expense
live
you're gonna
check to
have
check.
next month, right?
I
That's an
live
expense you're
check
gonna
to
have next
check.
month. It's an expense you're gonna have next month. So if
Sure.
that's something that you're willing to do, then so be it. But my only point is when you get excited about seeing these type of videos that tell you all the different type of things you could write off, you need to kind of sit back and say, does that benefit me to buy this car?
Mhm.
Just to be able to write it off. Now I got not only do I have this car payment, it's it's again like the video, people haven't seen it, the video of the kid with the Hellcat. He's 22 years old. He can't afford the car payment. He can't afford the car note. He's 22 years old. How much do you think the insurance is on a Hellcat for a
It's
22-year-old?
ridiculously high.
So how does that make sense? So how does that make sense? We're not even talking about the upkeep or anything like that. We're just talking about the car note and the insurance. And
Ridiculous.
again, I don't want to bust anybody's dream or tell you that you can't drive this certain type of car or whatever, but you're setting yourself up for failure if you are making purchases in the mindset of only saying, hey, I got to find something that's over 6,000 pounds so I can write it off.
Yeah.
So I can do a Section 179 because you can buy anything pertaining to your business and depreciate it out. You just can't depreciate, you just can't do the 100%.
Yeah.
So you can go buy a beat up car that you really and truly are using for your business 100%, and you can write that off. You would just have to depreciate it out. You just can't write it all. You just can't, do the bonus depreciation and completely write it off in 1 year. But the depreciation is an actual expense. But again, you're so fixated on the 6,000 pounds, and it wouldn't even be so bad if it was, you know, if we were talking about 6,000 pounds.
Mhm.
What are the videos showing you? It has to be the 6,000 pound Range Rover. It has to be the 6,000 pound G Wagon. It has to be the 6,000 pound Lamborghini, those type of cars, right? It's not just, hey, I have um, a box truck or something like that that I need for my business. No, it's the crazy kind of stuff that you definitely cannot afford. Most people cannot afford. But again, you're so fixated on depreciating that car out to somehow get this huge tax return you think that you're going to get. And again, you're killing yourself on the other side of the business because again, that's money that you could be investing. That's money that you could be putting um, towards paying other bills. That's money that you can be building your business,
Mhm.
right? If I'm buying more inventory, if I'm hiring more employees, if I'm doing all these type of things, that's growing my business as opposed to the person who takes all this revenue and now is paying two, three, $4,000 a month on a car note. But then but at the end of the day, can't make payroll or can't pay their rent, right?
Hurting people's feelings today, Eric.
No, we got to be truthful. We
We
got to
just
be
trying to do
truthful.
good business and go take our families on vacations and stuff. Like we just want to make our money, eat good, live good, and take vacations when we want. You know what I'm saying? Without being stressed and come back.
It-
So this
and to come back and be stressed, right? To come back and be stressed. I
that's
got
why we took the vacation.
to come back and be stressed. Got
To not be stressed. Take a little break,
to take a
little
little
self
break and
care,
then come back
little
and be stressed.
R&R, then come back to it. Then
Be
I'll
stressed.
figure out how to make payroll. You know
Correct.
what I'm saying? Plasma. I can donate blood, plasma. I can
You're
make that
talking
happen.
crazy.
You
You're
know,
talking crazy.
You got to be hungry for your business if you want business, though, right? You can't just act like all money comes, be coming in. Let's get it. Um, Eric, you mentioned that earlier, like certain expenses to be able to write off, like deducting like the house, as far as like the home office. A lot of us are starting businesses
Mhm.
out of our homes, right? And what would that look like without triggering like any issues or anything like that? I got my LLC, Eric. I'm trying to make some little moves. I've probably made about $1,000 right now. I'm moving, but I'm not doing a lot right now, but it's moving in that direction. Could I still, and I'm working from the home, like how would I be able to deduct that? What's the proper way to deduct? And when, if that's possible, right?
Okay,
So
so I won't talk about the Augusta rule right this very second. I'll just talk about the Schedule D, which is the form that you use for business use for your home. So the way that that works is, let's say I have a 2,000 square foot home and my office is 200 square feet. What that means is anything pertaining to the home, I can write off 10% of that as a write off for my business. So the mortgage interest, the property tax, the insurance, any repairs in the home, the HOA fees, utilities, all those type of things, I can write those things off for my business. The part that a lot of people miss, there's also a standard that you can do. You can just plug in your numbers and then it'll just do like a standard number. But you just plug in, the size of your home, and then it'll give you a standard number. But a part that a lot of people miss, it was interesting when you said that about I'm just starting my business out. I'm only making $1,000, whatever. Something people need to understand when you do a Schedule D, if your business is not profitable, your Schedule D cannot make your business negative. So what I mean by that is if I have a certain number off of my Schedule D, for that percentage, I can zero my business out, but I cannot make my business negative. My business cannot become negative because of that. And you cannot write off utilities, repairs, all kinds of stuff like that if my business is negative. You can write off your mortgage interest and property tax even if your business is negative, but you cannot write off all the other stuff if your business is negative on your Schedule D. So people need to understand that as well. If somebody runs out and says, "Okay, I have this business, and I went out and I did a whole bunch of repairs and stuff like that in the business, but the business didn't make any money," and they say, "Hey, can I write all that stuff off?" You cannot. You cannot. So a lot of people don't understand that. And again, I see a lot of videos and stuff like that when people say that you can where I see a lot of videos where people say that they can do that and whatnot. But again, it's going to kick it out. Basically, meaning you cannot show your business negative from repairs, HOA fees, things like that. You can again from your mortgage interest and property tax, but usually in most cases, all you're going to be able to do is just zero your business out. I mean, yeah, zero your business out. You won't be able to show the business negative.
okay.
So, and again, excuse me, when you see people say things like, "Oh yeah, I have a W 2 business. I mean, I have a W 2 and I'm going to zero my business. I'm going to zero my W 2 all the way down through my business." This is the kind of stuff that they're talking about. When they say, "Oh, yeah, just say I have a business in my home. I have an office in my home for my business. I'm going to write off my car. I'm going to write off my cell phone. I'm going to write off all this type of stuff to bring my W 2s down and have a business that's really not making any money and it's not profitable." And we think that's the proper way, again, to not pay taxes. And
But
you
it's
get a
okay to pay taxes you're not making like a lot of money, but if you got something, you got some legit expenses,
correct.
and it
Basically
is what it
something
is. Like you made a little bit, but you had these expenses. it is what it is. It's probably not going to drop. But if you've done everything as far as your Roth IRA, or I mean, as far as your 401k, and you put more money into that, whether it's your SEP, right? The SEP.
So even on that, I can't have a Schedule C that isn't making any money and then put money into a SEP IRA
Okay.
because I can only put 20 to 25% or whatever the profit of the business is into a SEP. So again, when people say it's great to have a business that doesn't make any money, so I don't pay any taxes, to me, that's kind of crazy if you're really trying to grow wealth, right? Because it's just like when you see people talk about, I want to open up a Roth for my child. What is the big key to being able to write up a Roth for your child? For your child to open up a Roth IRA. Your
They
child
have
has
to
to earn it. They have
they
to earn
have
it.
to work for you, right? They have to
No.
be
Well,
listed,
anywhere. So let's say your child works at McDonald's or cuts yards or something. Your child has to have earned income.
earned income. Yeah.
So the same thing with you. If I'm self-employed and I keep showing my business making no money and it's negative, I cannot put money into an IRA, correct? I
Yeah.
can't put money into a SEP IRA. I can't do those type of things. And so you might have to pay a little bit of taxes, obviously, because your business has to be profitable. But again, are we here about growing wealth? Are we here about not paying taxes?
Ooh.
And
Say
that's the
that
thing you
again.
have to ask yourself
Say
when
that
you're
again.
when you're starting your business. You have to ask yourself, do I just have this business just so I don't have to pay any taxes? Or am I really trying to grow this business to have an exit plan with my business? And sadly, that is not
Mm.
what a lot of people think. They just think, and the worst part is a lot of people are going to find out if somebody's not telling them this. We've had this conversation before where I've seen people who pretty much all their lives have been quote unquote self-employed and they either don't do taxes or they keep doing tax returns where they don't end up paying taxes. What happens when you get to retirement age if you've never paid taxes?
There's no, well, yeah, you ain't gonna have no Social Security, right?
You have no social security. And I've actually seen people come into this office and act crazy because they said, "Hey, I went to the Social Security office and I found out that I haven't been putting money into Social Security." And these are people I just met. So then we start talking about their tax returns and stuff. It's almost like when people come in here and they say, "How much money can I get back on my tax return?" They don't have any kids, so they don't have any exemptions, they don't have any credits or anything like that. They're just a regular person who owns a business. They're not doing estimated payments, they're not doing anything, they're not paying any taxes at all during the year, but then when they come to do their taxes, they expect to get a big tax return. How is that possible? If you do not have any credits or any exemptions or anything like that with your kids, right? So you're not getting the earned income credit, you're not getting the child tax credit, you're not getting any of those type of things. So how could you expect to get a tax return if you're not putting any taxes, if you're not paying any taxes throughout the year? So it should be the same mindset, right? When it comes to Social Security. If I go my whole life without ever paying Social Security, how can I expect to get a Social Security check?
True.
So again, these are the things we need to think about. But again, we're so fixated on this person is telling me I can get it to where you don't pay any taxes. So you can write everything off and you don't pay any taxes. Is that the wise thing for the future or is that the wise thing for today? So I don't pay any taxes today, but then, like I said, I'm not growing any wealth because I don't have any retirement driven investments that I could be doing that are tax deferred because of my income. And then I'm not putting any money into Social Security either. So again, it's great today, but in the future, does that make any sense? It's like one of the first videos I saw on a certain person. I'm not going to name them, but somebody has sent me a video on that person, and we've had this conversation where the guy said, I put my car on Toro. I made $5,000 in revenue, but I had $25,000 in expenses. So he's like, so that's $20,000 loss. And him and the guy are celebrating. And they asked me my thoughts. And I said, well, if you got $20,000 to throw away, why are you not putting it in your 401k at work? What do you mean? You've got a business that you lost $20,000 in, right? If these are legitimate expenses, you lost $20,000 in this business. So you're just throwing money away every year just to be able to save money on taxes, right? Don't I save money on my taxes if I put money into my 401k and put money into a traditional IRA?
Yeah.
Is that the same thing? And I'm growing wealth too, right?
Right.
But that doesn't make any sense to people. Those aren't the videos that you see. Those aren't the conversations that you see. We're excited again about all the things I can write off to not pay taxes. But if I put money into my 401k, that brings my AGI down too, right?
Yeah.
If I put money into a traditional IRA, that brings my AGI down too, right? In case everybody doesn't know what an AGI is, your adjusted gross income, right?
Yeah.
Which after your standard or itemized deductions gives you your taxable income, correct? So they're both working the same way, right? But for some reason, we think it makes more sense to create a business and write a bunch of stuff off to bring your taxes down, as opposed to, again, everybody talks about generational wealth and growing your wealth and being able to retire and stuff like that. That's the way you grow wealth. That's the way you're able to retire, right? Is by investing. I can't invest if my business isn't profitable, right? I can't invest because I don't make any money. But if I'm doing the things, even if it doesn't have to be if you want to have the argument about a 401k and stuff like that, a SEP IRA, cool. Get a self-directed IRA, right? You can do that, right? If you want to do an investing or crypto and things like that, you can do those type of things through a self-directed IRA, right? But you still need to have money in it.
Yeah.
Correct, Jeff. I say that all the time. It is not dollar for dollar. Like he's saying, that $25,000 loss is not $25,000 off of your taxes. It depends on your tax bracket. So again, when people are celebrating saying, I can save you $100,000 or whatever on your taxes, do that math. In order for me to save $100,000 in my taxes, how much of a loss do I need to take? Because again, it's your tax bracket. It's not dollar for dollar. But when people don't understand how taxes work and don't understand that, they see somebody do a video like that and they run to that because they really and truly think that makes sense to them.
Yeah.
But that's not how that, again, like I say all the time, that's not how taxes work. Taxes do not work like that. Everybody knows there are certain type of tax brackets. So why on earth would you think that if I bring my taxable income down by a certain amount, I'm going to get that tax break for that certain amount? It depends on what tax bracket you're in.
Yeah. Eric, I'm gonna shoot off a few things of what I'm thinking that I can write off, right? Because these are like these common things that you be like, look, can I write this off? Can I write that off? Can I write this off? So I'm thinking, and just you can give me a yes or a no, and then be like, you can kind of explain at it. But like, I feel like sometimes people get these wrong, right? And folks, please drop in the chat. Those who tuning in right now, please let us know what are the things you think that are deductions and things that you can write off. So can I write off my clothes?
Yes and no.
Okay. Can I write off my gym membership?
Yes and no.
Go ahead. Go on those two right there.
What I have on right now has my logos on it, has my information on it. So anything I buy that has my information and stuff like that on it, I can write that off. If I buy something that is specifically for my business, say I'm a truck driver or something like that, so I have to buy construction shoes, I have to buy gloves, I have to buy all stuff like that that is pertaining to my business, I can write that off. You cannot say, I started a business, so I went out and bought a bunch of suits that I'm wearing to church on Sunday, and I'm doing all these different types of things like that. You cannot write those things off. A lot of times we write off the dry cleaning and things like that, but you can't go buy like a whole new wardrobe with stuff that you can wear anywhere and say that that's for my business. Correct?
If it's pastors or somebody who's speaking and motivation,
but again, so say a pastor has to buy robes and stuff like that. Correct. Yeah, you can write that kind
of thing. Not like a regular suit. That's the uniform, though.
But can you wear that suit somewhere else?
These are holy suits.
Next question, Isaac.
These are designated and sanctified.
So the gym membership thing,
gym membership, yes.
So a lot of people ask like that because So I'll give you an example. I have a lot of barbers and hairstylists and but even massage therapists. I have a
Mhm.
lot of those type of clients. And we talk about being able to write off getting massages and getting your nails done. Correct? They write those things off as professional fees because again, you have to get your nails done for your business, right? And if you're on your feet and you're having to work all the time, cutting hair and stuff like that, if you don't get massages and things like that, it'll mess you up, right? Correct. So a lot of people write off those type of professional fees for their business. But again, it depends on your business.
So I can write off a massage. That's all I heard. I could write off a massage
For certain type of
and
jobs,
name
for
it a
certain
headache.
type of careers and businesses, yeah.
Really? But so if I work remote, so I couldn't do that, right? If I'm working from home or office or whatever, if
It'd be
I'm
a
in
hard
my
sell.
business,
Yeah,
I wouldn't be able to
it'd
go
be a
and write
hard
that
sell.
off.
Correct. It'd be a hard sell.
Okay, okay.
Yeah,
So there's okay.
correct.
I got you. I got you. So if I have a gym membership and this is what's keeping me healthy and being strong, and for as massage therapists need to be strong, you know, get on your feet, you got all that. Would that work in that category for a gym membership? Like I gotta stay strong and stay healthy fitness wise so I can write this off because I do have to do a lot of lifting and traveling. And if I am doing a lot of mobile work, then I'm traveling with my stuff, packing my big bag up in my chair, the table and stuff, or my chair. So I can't just be not strong to carry this stuff,
So
right?
people can write off percentages of that and things like that as well.
Okay, okay,
Yeah.
okay. Well, that was just my little thing. Maybe I was be like, can I write off the gym?
Um, yeah.
But what else you had, Eric? What else you had? What else you had?
All I got on this subject. So again, like I said, but at the end of the day, a lot of it you cannot, Shayna.
See, he said yes and no. I'm like, look, come on
I know
now.
what Shayna does. Shayna can't write that
Come
off.
on. We can't, we
I'm
can
playing with
see.
you, Shayna. I'm
That's
playing with
why when folks
you.
ask, they really don't know, Eric. That's why you the expert to really like figure out like, is this something we can? Yes, for that person, no for you.
But you know what's
Right?
interesting about that? But you know what's interesting about that? That's a whole different conversation than somebody who's saying, "I'm writing off this vacation," or "I'm writing off these type of crazy things." These are
I mean,
legitimate things.
can we call it something else, Eric? Can we call it a team building retreat for success and mental wellness? Because most of us take cruises to escape, right? No,
No,
for peace,
no,
tranquility.
no,
No?
no. That's crazy. I mean, again, if you're using it for a business, okay. At the end of the day, Isaac, I'm not trying to be funny because I understand where you're trying to go with. No, I understand where you're trying to go with this because Isaac, the problem is, let's just be real. The problem is the broke person who makes no money jumps up and says, "You told me I can go on a cruise and write it off." But I had no plans on going on a cruise or no plans of doing any of these things. But because you told me I could write it off, now I'm writing all this stuff off to make this business negative. Then when you get audited and you go in there and you try to say that, they're going to say, no, that's not a legit for your business, for what you're doing, for the type of money that your business makes. That's not a legitimate. That's like somebody who says, I'm doing real estate and I made no money, but I drove 75,000 miles. I'm a real estate agent, right? So I can write off all these miles, right? Is that legitimate?
That's a lot of miles.
No. It's no, it isn't. I've actually sat in audits on it. It's not. It's not legitimate, Isaac. It's not. It's the same thing as saying I'm taking everybody out, and I've had clients who've actually tried to say that I own this shop and I'm buying people lunch every day. No, again, these aren't my rules. These are the IRS's rules. I've sat in audits and watched the IRS say, no, you can't write that off. Not like that. You cannot write that off like that. Especially when most people's goal is, I have a business. Again, I hate to be rude in saying this. If you have a business that's making no money, we understand the scam. The IRS understands the scam. You're coming in. So Isaac, you have a business that makes no money, but you're going on a bunch of cruises.
That don't make no sense. I get you. I
Exactly.
get
That's
I
the
get
point. That's the
I get
point. That makes no sense at all. But that's your argument when you go to the IRS. I'm showing 50. Isaac, you have a business showing $60,000 in losses. I've seen it. Make that makes it. How long can you have a business that's showing 40, $50,000 in losses? How many years can you have that business?
not long. Not long at
But that's
all.
what people do. That's what people tell you to do. Again, I have a W-2, I make $100,000, and you're telling me you can help me bring my business all the way down. I understand the real estate part. I
Yeah.
understand the real estate part. But the buying the car, the doing all these type of things and saying it's part of my business to bring me down to not pay taxes, a normal person would say, "Well, how are you paying your bills?"
Mm, interesting.
And again, I don't mean to be rude or anything like that. Again, I watch the videos, I see people taking the courses, and I know it to be true because people come right in here and they ask those type of questions.
Mm. So
Something I'm dealing with right now, Isaac. Isn't this what we're talking about? Someone
yeah.
who's being audited right now. I don't want to tell people's business, but a client is being audited right now for what we're talking about.
Wow.
Are we not? We were talking about this offline, right?
Yeah.
So I'm not making this up. Again, these are not my rules. These are the IRS's rules. So don't say I don't know what I'm talking about because then I got to go here off the Paul. I can't tell you where the IRS office. I almost did, didn't I? I can't tell you where the IRS office is, but I got to go down there with you.
Got a question.
So I guess the
So how many years can you go without filing taxes, and how does it affect the business?
so I'll answer it this way. Sadly, if you are not being 1099 and you don't have a 1099K and things like that, as far as the IRS know is concerned, they don't know that you have a business, right? Nobody's 1099ing you. You're not using your credit cards and stuff like that to do a 1099K. Where a lot of people like that get in trouble is if they are being 1099 or 1099K and they don't file. And sadly, a lot of times, believe it or not, the IRS doesn't say anything for years. And then where people get in trouble is, let's say I'm trying to buy a house. I'm trying to go get a business loan and they want to see my taxes. Or, when you go buy a house, right, you got to show at least 2 years of taxes, right? So where people get in trouble is when they file those 2 years and then they have to go and set up a payment plan. And the IRS is not going to let you set up a payment plan unless they see all your returns, right? Not just those 2 years. So then when you go in to go do all the rest of your years, that's when you get caught up. Now, I know that they say it's 7 or 10 years or whatever, that after 7 or 10 years, you really shouldn't do the return anyway because it just falls off. But a lot of people get caught up when you're trying to do something. Again, going back to, I don't want to pay any taxes because I don't want to show I make any money until I'm trying to be a grown up and trying to do something, right? Until I'm trying to buy a house or something like that, right? Then I got to show somebody that I make money because who in their right mind would let you go get a house if you never do tax returns and never show that you make any money? Correct. And that's where people get caught up. So as far as how many years you go back, I won't even say how many years. It's more of when you try to do something, it's when you're now having to get all of your tax returns in a row to get all your stuff together to be able to do whatever it is that you're trying to do, be it buy a house or whatever. All that's going to go back and hurt you. So you'd be better off just going ahead and filing your taxes because of all the failure to file, all the interest, all those type of things. You'd be better off just going ahead and filing, getting on a payment plan, and doing what you need to do with your business, as far as personal and all that stuff. Exactly. So you used to be doing estimated payments if you have a business that you know that you're going to be profitable and you know you're going to make money. I mean, you know you're going to owe taxes. There are a lot of people out here who you can have a business and be profitable and not actually owe taxes. You understand how that can happen, right?
No, I don't understand how you can actually, if you're profitable,
Mhm.
and how can you not pay taxes?
If I have kids
Oh,
and I get
oh,
the earned income credit, child tax credits, and things like that, so I can have a business that's profitable, and then still not owe taxes at the end of the year because my earned income credit, my child tax credits, all those things are going to eat all that up. But say I'm single, I don't have any kids, I don't go to college, I don't have any of those type of things, then I know I can end up I know I'm gonna end up owing taxes at the end of the year. So if I know I'm gonna owe taxes at the end of the year, you definitely need to be making estimated payments through the coupons or going online and making the payments every quarter.
okay, that's good. That's good to know. So if someone's making profit about $200,000 a year in their business, and they got like 3 kids, could
No.
they even write like they would still have to pay taxes though, right?
Oh, hell yeah.
You know what I'm saying? Like that's why I was looking at the
Yeah, you're
gap.
not
Like
getting any
I'm
earned
like
income
thinking,
credit or none of that. No, hell yeah. Yeah,
so even with, but you still get the child tax credit though, right?
yeah, that phases out, but yeah.
No, but like again, I won't get it at all, or what?
No, it phases
It'll
out.
count, but
Yeah,
it won't
it counts
count.
until it phases out, yeah.
You still,
If
it'll
you're
just
making
kind
that
of.
type of money, yeah, it counts till it phases out, yeah. If you're making that type of money, if your business is really profiting like that, there's a whole another step. If your business is profiting like that, you definitely need to be making estimated payments, and you definitely need to be thinking about turning your business into an S corp.
Oh, that's where it
Where you're
is.
so
There
you're
it
so
is.
not only where you're making estimated payments, you're actually again like myself, because the type of money I make, obviously I pay myself a salary and things like that. So I'm paying taxes every month, just like somebody who's going to a job. Right? And then if the S corp is profitable, I still have to pay taxes, right? Because I'm only paying taxes through my job, quote unquote, through my business on the W-2 that I'm paying. I'm only paying the taxes on my salary. So the K-1 that comes over on the 1120S for the S corp, I got to pay the federal on that. The good part about being an S corp is I don't have to pay the self-employment tax on the K-1 part that comes over, but depending on how profitable the K-1 is, you have to pay taxes on that federal. So I still have to make estimated payments and write a check and all that stuff, even though I'm maxing out my solo 401k, even though I'm doing an employer contribution, all of that stuff, even though I'm having taxes taken out of my check every month like everybody else, I still have to pay taxes. So,
Mm, wow.
and
Wow.
again, I'll be honest with you, I don't write off going on vacation. I don't want that drama. I don't want to have to go in there and explain that stuff. I pay myself a salary. You know what I'm saying? Like I said, I'm paying myself a big enough salary to be able to max out my solo 401k. I show my business profitable enough to not max out my employer contribution, but I write a nice little check every year for my employer contribution and stuff like that. So I have to be profitable, right?
Mhm.
So I end up paying taxes at the end of the year. I don't try to write off all these different things, whatever, to not end up paying taxes. To me, I would rather be able to again grow my wealth, by being able to put money into my solo 401k. You can't do that if you're not paying yourself a salary, right? I can't
Yeah.
open up a solo 401k if I'm not paying myself a salary. So I have to pay taxes. If all it is social, social and Medicare, right? If I'm W-2, no matter what I'm putting into my 401k, I have to pay the self-employment and the Medicare on my salary, right? No matter what it comes down for, and that's on anybody's W-2, right? Even on your W-2, right? Line one and line three are different. Line one is line three minus whatever you put into your 401k. Look it up. Everybody pull your W-2 up and look it up. Whatever you're putting into your 401k, be it a traditional 401k, that comes off of line one because again, that's tax deferred, right? But your Social Security and your Medicare, that's not tax deferred. So you're paying the taxes on that no matter how much you put into your 401k. So you're having to pay taxes to be able to do those type of things. But again, we're so fixated on I don't have to pay taxes. I don't have to pay taxes. Are you really growing wealth by doing that? It's one thing if somebody said, I'm saving all this money in taxes to go do all these other things. The other thing you're doing is buying the G Wagon. The other thing you're doing is going on vacation. How's that growing wealth? That's how you bring
Mm,
your taxes down, right? Because I'm
yeah.
going on this vacation that you keep claiming I need
Wow.
to go on, right? You keep claiming
Man,
everybody needs to go, right? Buying these cars, everybody says we need to buy, right? To be able to write them off. But are you growing wealth by doing that?
that man said you want to go on cruises or you want to build wealth.
And again, you can do both. You can do both, but you got to wait till your business grows to that. And a lot of us aren't willing to do that. We're not willing to wait to where we're making enough money to hit our goal every year as far as this is how much money I want to put into retirement. And then I have all this money left over to live my lifestyle. We just want to live the lifestyle.
I want to go on brunches. I want to live the life, you know. And it's like making you decide between like what you want. But if you again, your business is profitable, if you're putting in the work, you put in the effort to be able to help, make your business grow, then you should be able to have both. And I like that. Like if you're putting in the work and focusing, and then yes, you can enjoy the fruits of your labor at the end of the day, but you got to put in the work. Don't expect
Right.
it to be overnight. And it's like, oh, I got this little money, I could go do this. No, reinvest in your business so you can get it to grow it to where you can be like, hey, the business is out of whatever credit card business credit that I have or loan I got or whoever invested. I paid off whoever I needed to pay off, and I'm clear now. I'm moving where I got enough money to where I'm comfortable, and hey, I can go take the family on a to Disneyland or whatever, right?
Correct.
Lake Tahoe or
So,
whatever,
yeah.
skiing
So think
trip.
about that. So, how does that make sense? So, let's say somebody helps me get a loan for $250,000 for my business. The business makes no money. The business is not profitable, but somebody helps because, again, I can't go get this loan on my own or whatever. Somebody commits fraud in order to get me these loans, right? That's going to be a whole nother subject, right? But somebody does all this to help me get these loans. Then I take this money and instead of growing my business, I go out and buy these cars and I go on these vacations and I go do all these things because in the back of my mind, I say, if I go do these things, I can write them off. So I'm not paying taxes, but I'm paying interest and paying a loan back on a business that's making no money.
Mm,
Because again, I'm not doing anything to grow the business. I'm just living this lifestyle and writing everything off. But
yeah.
again, I'm not growing my business. I'm not taking the money to grow the business. I'm taking the money to go do all these things that I think that successful people look like and write them all off on my taxes. But I'm paying interest and the loan back to be able to write it off.
Mm,
How are you going to be successful doing that?
that's a lot. That's a lot.
But again, we don't think like that. We don't think like that. We see somebody say, I can help you fix your credit. Then once I help you fix your credit, I can get you this huge amount of money. Then once I get you this huge amount of money, you can take that money to go buy a 6,000 pound car, go on all these vacations, go buy all these things that you can write off on your business. No business plan has been discussed. No growing your business has been discussed. No retirement, no generational wealth growth. None of that has been discussed. But that's what everybody thinks. And I know it because people call and they send those type of videos and ask those type of questions. So
Oh man, that's amazing, man. So Eric, as we
again,
close,
please, I'm not trying to be doom and gloom. I'm not trying to be judgmental or anything like that. I'm again, like we said, we're just trying to give you a different perspective. And again, as you see, and again, one thing I wouldn't even say I pride myself on, but you're never going to see me doing videos jumping in a car or going on vacations and doing stuff like that. Because again, to me, that's not business. That's not growing your business. That should be the last thing on your mind. You're at, then after that, if I'm making enough money to be able to do those type of things, that's when that conversation should come in. You should not be coming in here talking about, I went on this vacation, can I write it off? But when I say, hey, have you ever thought about opening up a SEP IRA? And you say to me, I can't afford that. Make that make sense. I'm thinking about going to buy this car because it's over 6,000 pounds. Do you have a SEP IRA? I can't afford that. It's like somebody, if again, I'll use a person who has a W 2, and they come in and they say, Eric, how can I save money on my taxes? One of the first things I do is what? I look at how much money you put into your 401k, right?
401k, yeah, 401k first, right?
That's the first thing I look at. If you don't own a business or anything like that, that's the first thing I look at. I say, if we're talking about bringing your taxes down, you can put more money into your 401k, or you can open up a traditional RA. And what do you think most people say?
They can't do it because
They say, Eric, isn't that going to give me a smaller check? Yeah, because
small.
the money's going into the retirement. Eric, I can't afford that. But we're having a conversation about you going and buying a bigger car. Are you going on all these vacations? Again, I'm not here to judge you. I'm not here to judge you. But again, you really need to think about, what are your real and true goals? I can't tell you not to go on vacation. I can't tell you not to buy that car. But if you ask me, what do I think is best for your situation? I have to be honest with you, right? You're I'll just say it. We've been watching videos all these last couple of days of what? Nearly over a 500,000 people in their 80s, Isaac, still have to get up and go to work every day.
Yeah, that's sad.
Not a choice. The 3 to 6% that your job is matching is not enough for you to retire. The 3 to 6%, listen to what I'm telling you. If you are only doing the match of what your company is doing, retirement might not look good for you. It's a hard lesson that you need to hear today and not at 60. You don't want to hear that at 60, 65, when you're talking about, I want to retire, and you've not been doing what you need to be doing all this time. When we're talking about time value of money, compound interest, all kinds of things like that, it should really and truly be your goal in your budget. Like we say, you really need to be looking to put 15 to 20% of your income into building an emergency fund, building a savings account, and investing. It doesn't have to be your 401k. A lot, especially these young people, a lot of these people do not like 401ks. A lot of people just do whatever the match is and stuff like that. And I know the Grant Cardones and all of them, they tell you how it's so horrible, you know, how you're going to have to pay all these taxes when you get to retirement and stuff like that, putting money into your 401k. A lot of people walking around wishing they could pay some taxes on some 401ks because they did not put money into their 401k. So they have no money. I tell people all the time, whatever your plan is for retirement, as long as you have a legitimate plan that you can articulate and show how that's going to work that plan. You don't have to put money into a 401k. You don't have to put money into a traditional IRA, but you've got to do something. If you want to do real estate, if you want to start a business, any of those type of things, great, go do those type of things. The problem is most people just do what? Live check to check
Yeah.
and live their life. Go on vacations, drive that car, do those type of things. There was a question from Jesse.
Oh yeah, there was. He said, why do people think if they get a LLC that the responsibility of the company won't fall on them?
I have no clue. None. Especially when most times when people are growing an LLC, when you go out and try to get business credit, What is the first thing you need to do? If I'm starting a business and I'm trying to grow business credit, what do I have to be? The personal guarantor.
Yeah.
So a lot of stuff that you were signing for your business, you were signing.
Yeah.
Number one. And then number two, if I'm steadily having all these LLCs and I'm steadily shutting these LLCs down, how am I growing business credit? I'm just moving from one LLC to another. And then lastly, I don't understand why people don't understand this part either. When you go to get an LLC at the IRS, what do you have to give them?
Oh, like your personal information.
Correct.
Yeah, you can't just go up there and just do that. You got to give like your
There's no
stuff.
paper trail back to you or anything like that. But again, it goes back to the mindset of if I see one more young kid on here telling me how they can fix my credit in 14 days, I just don't know what to say. But again, that's our mindset. Like like Jesse's saying, everybody's being told just go open up an LLC, get an EIN number. You can go get all these credit cards. You can do all this credit card stacking. I'll help you get all these loans and stuff like that. And then if it falls apart, we'll say somebody stole your identity. We'll say that you were sex trafficked, not to be funny, but that is exactly what they're doing, right? Not trying to say they're trying to be funny, but that's exactly what they're doing. They're saying someone stole their identity. I've been sex trafficked. Or they'll try to say, you need to prove to me that that's my credit card, that's my debt.
Sovereign
So now
citizen.
we got to go back and forth with all these letters and everything on a credit card that you know damn well you used, on a repossession that you drove this car around until it got repossessed. But now that it's on your credit, you want somebody to write a letter to get it taken off your credit because somehow the company who let you get the car, somehow they wronged you. So you believe just writing the letter should be able to get that removed from your credit.
All right, Eric. As we close on this evening, you got some words of wisdom, closing questions or thoughts
So as
on
always, we go
on
off
what
tangent of what we plan on talking about. But I think the main thing that people should understand, especially as we're getting towards the end of the year, where people are coming in and we're doing the consultation to talk about the things that they need to be looking for and getting together and gathering for our meeting. When I think about things that I'm writing off or being able to write off, I don't look at something and buy something just in the mindset of saying, I'm gonna go buy this because it's a tax write-off if I don't have everything else together. You understand what I'm saying? If I'm struggling to do all the other stuff as a business, to me, that absolutely makes no sense to start a business and just be able to write all this stuff off just so I can get a tax savings. But I'm struggling to pay that car note. I'm struggling to pay that credit card back. I'm struggling to pay that business loan and things like that. And I'm not building any type of wealth on the other side. I'm doing all these things just for the ability to write this stuff off. And again, I say all the time, and I hate to say it, somebody will come in here and they'll say, but Eric, that's what wealthy people do. I say it all the time. What? There's a difference between a wealthy person and a person who's struggling, right? A wealthy person, like the example of you saying, when I'm done at the end of the year, I have $200,000 in profit, in legitimate profit. That's a different discussion than somebody who's struggling to pay their car note every month, right? Why do we not understand that? How is that the same person? I'm paying all my bills, I'm paying my overhead, I'm paying my payroll, I'm doing all this stuff. And at the end of the year, my profit and loss statement shows I have a $200,000 to $250,000 profit. So, Eric, can I go buy that car? If you're doing everything else, I don't understand why not, especially if it's for your business, right? I don't understand why not, right? So, yeah, go buy that instead of paying taxes on it. The person who's absolutely struggling in their business. And again, I'm not trying to say it to be mean, but we got to be truthful here, right? The person who's struggling to pay their bills every month, the person who's struggling in their business believes it makes sense to go buy a car by December 31st because I can get the 100% depreciation on it. But I've created another bill, right? Didn't I create another bill? Because now I have a car note, right? So I'm really going to be struggling next month. Next year, I'm really going to be struggling. But I got this huge tax write off. That's not even dollar for dollar. I got this huge tax write off because I got to write off the 100% on my business. But now moving forward, I'm going to struggle making the car note. I'm going to struggle paying the insurance. I'm going to struggle with the upkeep of the car. And yet somehow we get excited and think that makes sense to us. So I know it sounds rude or whatever when people call or come in and we have these conversations. I always say, does it make sense to you? Make that make sense to you. Explain to me how that makes sense. And I'll just leave it at that.
All right. Thank you, Eric. Really appreciate it. This has been a lot of information that I did not know, that I knew, but I didn't know, but I got a lot more clarity on. I hope everyone tuning in right now is getting a lot of this information. So we're really excited to be here every Tuesday at 7 p.m. Master Your Money with Eric Anderson. And so our next, you had any other last words as far as anything you want to share?
No, I'm good for tonight, I think.
All right. TheFinancialTurtle.com. Please go on there. Please follow us on all the Instagram and what's that, Facebook, TikTok,
YouTube.
YouTube, all that good jazz. So if y'all want to schedule a consultation with Eric, please give him a call. Give him a call at
And
512.
again, I'm
What?
sorry, I will say this. And if there are any type of videos or anything that you guys want to send to us that you have questions, I know I said that before, but usually when people send me things like that, I just respond back to my client. But a lot of stuff that people are sending me now, we are going to start making daily videos or different comments and stuff like that on those type of things. So if there's something that you want me to comment on, we can wait till Tuesdays to talk about it, or I will start making videos throughout the week to comment on the type of questions that you guys have, different videos that you have, different types of situations. Um, there's a lot of crazy stuff out here. I'll just say that. There's a lot of videos out here that are misleading. Um, a lot of videos of different things that happen to people, influencers, people out here who are out here trying to help you grow your business, so to speak. If there are videos out here that you have questions about, just send them to me and Isaac, and we will do little short videos on them and send them out to everybody to try to answer everybody's questions.
Awesome. All right, everyone. Y'all have a good evening.
All right, Isaac. Thank you, sir. We will talk to you
Thank
soon.
you, Eric.
All right.
Yes, sir.